Well, good afternoon and good morning, everyone. This is Susan Patrick with STEM on Us, and welcome to our August hot and steamy FAR Vision Vantagepoint user group meeting. I'm going to kick it off today, and I'm just so excited for our presentations today with Wayne and Matt. I'm not used to being surrounded by such handsome gentlemen, but we're going to kick things off with maybe, if I can get things going here, webinar instructions. So most of you are familiar with our webinars. We get a lot of people signed up, so everybody is muted upon entry. If you're having any audio issues during, obviously if you're having them now, you can't hear me, but if you are during the webinar, sometimes it's easier to flip your option to call in and use a phone. Sometimes the computer audio gives us fits. Couple of basic instructions here. Today we have two handouts, so make sure you check out the handout section. We have the PDF of the webinar today, and then we also have our little FAR unallowable list that I think Wayne pulled together back in July. As always, we will monitor the questions panel. So please, if you have a question today, please put that in the questions panel. We will do our best to answer your questions today, but if for some reason we don't get to it, we will certainly get back to you. Please don't put any questions in the chat. We don't monitor that throughout the event, and we're just so excited that you're here. So as we move right along, again, I'm Susan Patrick, and again, we've got these fine gentlemen today, where we have Wayne. So those of you in the government contracting world, I'm sure are very familiar with Wayne. And then we also have Matt, and Matt is actually, this is his first virtual user group meeting presenting, and he is doing me a huge favor. So thank you so much, Matt, for joining. And Jessie is actually pinch hitting for Kaylee today. So we normally have Kaylee and thank her, but today Jessie is on, and I'm sure a lot of you are familiar with Jessie. She keeps us definitely on the straight and narrow. As we look at our agenda for today, I'll kind of go through some upcoming events and updates. Then we'll jump right in with the fun stuff with Wayne, and then we'll wrap things up with some tips pertaining to FAR-related items in Vision and Vantagepoint. Again, if you have any questions, please put them in the questions panel. And just for me, if you want to do anything for me today, please fill out the survey at the end of the webinar. It really helps me kind of understand how we're doing, what we can do better for you guys. Honestly, I do read through the whole thing each month. So as we kind of look at our upcoming user group meetings, the next one, we're skipping September because of Insight. So the next one would be scheduled for mid-October, so October 20th, same time, same channel. We have some tentative topics. We're just not ready to publish them yet. Hopefully I'll be able to get those over to Jessie and our marketing team here soon and get those topics for October published. But again, we like that feedback on what we can present to help you guys out. As we look into, I was going to say next week, but as we look at tomorrow, we do have an IT strategy for the future webinar. One of the great don't misses today in such a technology-based world. So one of our technical webinars, please don't miss that. And then as we look into the beginning of September, which is kind of crazy, I'm saying September 2nd already, we're going to be talking about developing business virtually. We are such a virtual world these days. Again, another webinar not to miss. The Clarity Study, for those of you that haven't already grabbed a copy, it is out. It has been out now for a couple months. If you need a copy, you can get a copy here on our website. I'm sure it's also available on Deltek's website as well. So check out the Clarity Study. And thank you for anybody that participated. It really helps give us a better foundation for the key metrics and the analytics. We talk about town halls. Normally Deltek does these every quarter, and due to Insight, there won't be anything happening in September, but the next two that I saw slated for Vision and Vantagepoint are December 8th and 9th. And keep in mind, if any of you have any of Deltek's other products like PIM or Talent or IQ, they do have town halls for those as well. So check out Deltek's website where they have the customer town halls. There might be, another product of Deltek's that you use, but there's also a town hall for you. And then as we talk about the Vision to Vantagepoint upgrade dates for Deltek Cloud clients, I hope these are right. I pulled them from our webinar last month. They may have shifted. There is an upgrade happening this weekend. Obviously, it's a little too late to get in on that. Fun. They are skipping September and then the next few dates in October, November, and December. Keep in mind that those ones in October, the fourth quarter, are moving you to 4.5. And you must opt in at least 3 weeks prior so that Deltek can kind of get your service request for that upgrade documented properly. And of course, I've already mentioned InsightWide. I don't know, I wasn't counting, but maybe 3 times now. You can still register. There are some of the sessions that are no charge, but the meat and potatoes is a fee of $95 for you to access the various sessions. So you can go ahead and register for the Deltek Insight Conference, and I'm really excited. I wish it was face-to-face because I miss seeing all of you, but another virtual Insight coming around the corner. So without further ado, I'm going to introduce Wayne. Again, his great smiling face, the wealth of amazing information, a great guy all around. But he is our managing director of our government contracting. Came to us, what was it, last fall, I guess. And he has over 35 years of experience in the AE space and government contracting. So I'm sure many of you have heard of Wayne. I think almost every other client I talk to is like, oh, Wayne, I know Wayne from way back. So we are absolutely thrilled to have Wayne on board today. So we're going to go ahead and we're going to flip things over to Wayne. And while we're doing that, I'm going to have Jesse pull up our first polling question. So as we talk about FAR and we talk about compliance, we're just trying to get a handle of our audience here to see if you are required to be in compliance with FAR. And I got to pull up my little thing so I can see it trending. So as I look at this trending here for you, Wayne, so far it looks about 3/4 say yes. So there's, for the most part, your audience. It's kind of a neck and neck tie of the no's and the I don't know. So I think, Jesse, we can go ahead and close that out. But around 3/4, Wayne, for you is a yes. So there you have it. And I'm going to go ahead and flip things over to Wayne, and you can go ahead and share your screen, and I'll give you confirmation that I can see it, and then I will put myself on mute.
You should have had one more choice for the question, and that was, we do, but I wish we didn't. So
that is a good one. I did not get that one added, so my bad. Yeah.
No, it's all good. All good. It seems that people who do a lot of people who do it wish they didn't. And I can understand it can be a absolute pain in the backside. Am I supposed to get something that I can see my shared screen?
Yeah, it should have popped up. You should just be able to click the button at the top that says show my screen on your GoToWebinar panel. There we go. So we see the presenter view, I guess, with the stack slides. So you might just have to switch your view.
Just hang on. I'm a little challenged here.
There you go.
I can do that. How's that?
That is fantastic.
My gosh, that's probably perfect. I can tell it's perfect because it's on all my screens. So obviously I can't go wrong there. Good afternoon, morning, everyone, and welcome to the session today on the FAR, government contracting in general. Most of what we do, and when I say we, I mean Stan Boness, those of you that know me, probably met me years ago, and you could tell by the gray hair that I've been doing this for a while, and that's when I was at T. Wayne Owens and Associates too. And back in, actually, I think it was in late October, we were acquired by Stanbaugh Ness, and are really excited about this process. One of the things that we've done, that we started doing it too, and we're doing now, is getting a little more into the federal contracting, not just the state DOT contracting, even though the state DOT contracting is still dominant of what we do. We've been very fortunate and been able to hire 2 people from the DCAA, Defense Contract Audit Agency, and they've just been such a joy to have around. Not that the other people aren't a joy to have around, but they have been a joy to have around. But when we talk about government contracting, everybody says, okay, it's government contracting according to the FAR. Yeah, okay. That is true. That the FAR is the foundation for the development of the overhead rate, because I'm going to jump around a little bit here, Susan, maybe, if my computer works, and if it doesn't, then maybe I won't. All right, when it comes to government contracting, by law, you are chosen on the basis of qualifications. When it comes to the projects that you get in government contracting, those of you that don't do government contracting, you're chosen not on the basis of price, but on the basis of qualification. Because, you know, if somebody designs a bridge, I want to be sure that they are really good at designing bridges, especially if it's like really high bridge, because I don't want it falling down when I'm going over it in my car. So the teams are chosen on the basis of qualification. And once they are chosen on the basis of qualification, then they go into the negotiation, price negotiation. And that negotiation has a formula that is dictated by law. Again, because you're chosen when it comes to negotiation. If there's no basis for that negotiation, you can just say, make up any price you want to. So it needs to be a fair and reasonable price. And what they do is they develop a scope, consultant goes back, looks at the staff level and hours necessary, and then they negotiate hours. In the case of the DOT, they're only supposed to negotiate hours, not direct labor rates, not overhead rates, and profit is negotiable also. So once they know the level of effort, the number of hours, and multiply it times direct labor rates, and then that times your FAR overhead rate, or plus your FAR overhead rate, plus profit, plus expenses, that's the fee. That's the contract value of the contract. And how it is actually billed is based upon what the payment method is. It can be cost plus fixed fee, which is the most dominant at the DOT levels. It can be lump sum, it can be unit rates. There's just all sorts of choices out there. So, but when we start talking about the FAR is about the development of an overhead rate. So the FAR stands for the Federal Acquisition Regulation, and it's used by all agencies for the acquisitions of services or supplies. Now, the FAR was written really for large contractors, your Boeings of the world. And it's a little confusing sometimes about how it's written, because it was written for a manufacturer. Now, we're an engineering firm. You're an engineering firm, or an A&E firm of some flavor. And so we're obviously not a manufacturer. But when it comes to the interpretation of the FAR, it's really pretty straightforward. Parts of it are pretty straightforward, but it covers anything from the type of accounting system that you need to have. That's actually in there. It establishes the basis for the presentation of this overhead schedule as far as allowable and unallowable costs are concerned, and that is GAAP. Your financial statements must be generally accepted accounting principles. And it also has what I call the no-no rules, which is what I think the handout is. That correct, Susan? It's allowable and unallowable, the basic allowable, unallowable stuff. And there is some commentary in there as far as why it is either allowable or why it is unallowable. But there are some, when you go into the federal contracting side, there's also things in the FAR as far as standard contract clauses, solicitation provisions, and some other interesting stuff. Now, when it comes to the state DOT contracting, that contracting is the FAR, only Part 31 is used in the state DOT contracting. So, so in Part 31, which is the basically allowable, unallowable costs, is the biggest part of it. That is used for DOT contracting. But that's what the FAR is. It's actually a pretty straightforward document. It's not exactly the best reading on earth, but it's not that confusing either. So again, we talked about the compensation formula. Again, level of effort, direct labor rates, overhead, profit. Now, you're chosen on the basis of qualification, and the basis of this is that you have a fair and reasonable, that the government pays a fair and reasonable cost for performing the work, but also the consultant should receive a fair and reasonable compensation for what they're doing. And the honest truth is that the government at a high level wants you to make money because they want to incentivize firms to come and work for the government. So, but fair and reasonable is defined as all costs legally required to be a business, all costs not specifically made unallowable by the FAR cost principles. And I can't tell you the number of times I've dealt with a government employee. We were discussing a certain cost, and they said, well, where is this allowable according to the FAR? Well, the FAR is not a bunch of allowable costs, it's a bunch of unallowable costs. There are some expressly allowable costs, but for the most part, Part 31 is about unallowable costs. It's about the development of the rate, the accounting system type stuff, and the unallowable costs. But again, all costs legally required to be a business are allowable costs, assuming it's not specifically made unallowable by FAR cost principles. And we're going to talk a little bit about that as we go through. And then all cost of conducting a business in a normal, prudent manner. That does sound a little vague, but it's really not that vague, because you know really what it takes to run your business. And I did a presentation at AASHTO, the American Association of State Highway and Transportation Organizations. And I really forgot what I was talking about. But during the presentation, I noticed that John McElvoy was sitting in front of me. And I was talking about this concept of fair and reasonable profit. And I was speaking to a bunch of DOT types. And I made a potentially fatal mistake of asking John a question that I did not know how he was going to answer. And the question was, John, my understanding of this is that the government wants to pay a fair and reasonable profit, that price for their work, and that the government would like for a firm to make a profit on the work, even though for a lot of consultants, it seems like the government wants to beat you down all the time on the price. But theoretically, the objective is to have a fair and reasonable price. And he said, I'll go a step further than that. We want you, consultant, to make a lot of money. We want to incentivize the best firms to come work for the government. And it needs to be, fair and reasonable, but it needs to be fair on both parts. So government contracting has a bad reputation of being low profit stuff. And I can honestly say that some of our most profitable clients are dominantly government contractors. It's just the fact that they understand how to manage the overhead rate. And the key piece to every firm, as far as a firm's profitability, is they have good project managers, good project management. So regardless of everything else, if you've got good project management, a firm will make money. A firm will do extremely well. So in the case of the government contracting arena, the managing of scope and hopefully with the negotiation, you can have a fair and reasonable profit for here. Now, I need to say something here. Sorry, I'm trying to do something I'm almost multitask. I don't multitask, just to let you know. I have a bad time sometimes because I confuse the word project and contract. Because a project is not necessarily a contract. I mean, you know that. I know you know that because we've got more than a few FAR audits that we do that the consultant uses Deltek Vision. As a matter of fact, if we have a new client and I ask, what software do you use? I'm surprised when it's not Vision or Vantagepoint now. Sorry, Susan. I'm really surprised. But you know that you can have a project that's not a contract. I mean, we've got firms with marketing projects, they have projects for unallowable cost. They have all sorts of projects within the system. But for the purpose of this presentation, if I say project, I'm really talking about work on a contract. The contract is defined by FAR 2.1. It's a mutually binding legal relationship obligating the seller to furnish the supplies or services, including construction, and the buyer to pay for them. It's important also to know when you're doing contracting with the government, more so than any other type of client, that you know when the defined beginning of this contract is and when the defined end of this contract is, because they're both very critical things here. Polling question. Do you have a clear understanding of the definition of direct versus indirect cost? Ooh.
Let's see how this one's trending as we're going. We got a lot of smart people on the call today, Wayne.
That seems like a really simple question, doesn't it?
It seems simple. Seems is the operative word there, right?
Yeah, it is simple.
It gets even more complicated when you talk about allowable and unallowable, but I don't even want to go there.
Well, direct and indirect isn't as straightforward as it seems.
Exactly. So I think we'd probably close this out. We got 92% saying yes and 8% saying no.
I think I would just say no, just to say no.
That is just like you, Wayne.
Yep. Can I go forward now?
Yes, you can.
All right. Now, direct, indirect. A direct charge is a cost that is specifically attributable to a given contract. If it's legitimately, the word billable is there, but I've got to be careful with the use of that word billable. If it is legitimately includable in that contract, it is a direct charge. It's sort of a but for this contract, you would not have incurred this cost. That's a direct cost. Indirect cost, this overhead, is cost that you would have incurred whether you had the project or not. That's broad definitions of the two. There's one thing that's a little different within there is labor, because labor is an allocated cost. So labor can be direct or indirect. But that's the reason we do timesheets, and everybody does timesheets, correct? That's an excellent thing to do. I got yelled at Monday, by the way, because I had not finished my timesheet. So if I find it difficult to chastise people about timesheets because I'm sort of guilty myself.
Calling the kettle black.
Yeah, I have a little bit of a problem with that. But broadly speaking, a direct charge, a direct cost, is a cost that's specifically identifiable with a project. But for the project, you wouldn't have incurred this cost. So that's the broad answer between direct and indirect. Now, by the definitions, which is direct and indirect. Technical design work done on projects, that's obviously a direct cost, correct? Project management time is obviously a direct cost. Time spent by principals overseeing the project. I probably should have had direct or indirect there because it depends on who you talk to. Because many project managers that I talk to say the principals just spend too much time on their project just because they need to get their utilization up too. But time by principals overseeing the project is a direct cost. Now we're getting a little fuzzy coming up next. So time spent by finance preparing invoices, it can be direct or indirect. standard office supplies used on a project. It can be direct or indirect. A time spent redoing work, project work that was done wrong, can be direct or indirect. Now I'm going to cover those in a minute. Time spent on over budget jobs is direct. It is not indirect. Client called me week before last and said that they had a new project manager that came from another firm, which I knew the other firm too, and they were adamant that if they were over budget on a job, that time spent is overhead. So he was going to charge his time on jobs that were over budget to overhead. And I just told the client, I said, you know, you can do that, but that's why people go to jail. So, you know, but for that contract, you wouldn't have incurred the cost. Over budget jobs, that is a direct cost. Now, the time spent by finance preparing invoices and the standard office supplies used on a project is a matter of firm policy. If you do a lot of government work, and well, first of all, those of you that do government work understand that these invoices are not necessarily the easiest ones to prepare, especially cost plus fixed fee. And if you do have to prepare those invoices, and they are time consuming, it's very possible to negotiate that time within the contract itself. Now, the advantage of having finance or your accounting department charge their time for the preparations of the invoices, you get reimbursed for that cost immediately, or within 30 days maybe, 60, 90 days, at least more currently than you do if it was included in overhead. Again, standard office supplies used on a project, it can be direct or indirect. It depends on your firm policy. Years ago in DOT contracting, there were overhead caps. Maryland, for instance, had an overhead cap of, I think, 132%. Now, those of you that are in firms and your overhead rate's 160%, you're going, how on earth do you make money at 132%? Well, the way they did it was they treated virtually every cost they had as a reimbursable cost. So if they used a pencil on a job, it was a direct cost and reimbursable. And they did that to get stuff out of overhead, getting into a direct cost, and now they've balanced their overhead with what they were being paid. Time spent redoing work, project work, that was wrong. You notice there we've got a direct and indirect there also. It's really a direct or indirect. Now, remember a minute ago I said that a project, a contract has a defined beginning and a defined ending. Now, if time spent redoing the project work that was wrong occurred as part of the regular QA QC practices of the firm, and they go, guys, this isn't right, you need to fix it, then that's a direct cost. But what happens if you discover an error 3 years after that project's done? And you know, typically what I'm talking about is professional liability claim. Somebody comes in and says, you know, that drainage plan that you had is really flooding my property and it needs to be fixed. That's professional liability claim. Now, in that case, when you redesign the drainage plan to keep it from draining into somebody's yard or business, or you buy land for some type of retention pond, all that is an indirect cost. The labor spent redoing the work is unallowable indirect, but the other cost associated with it, honestly, is just a deductible on your professional liability policy. So that's why that can be direct or indirect. And then visits, flights to visit the client for the kickoff meeting, that is absolutely direct, because had it not been for the project, had it not been for the contract, you would not have incurred the cost. Now, the consultant responsibilities, this is a big deal. I mean, it's really a big deal. Adequate accounting records is a huge deal. And, you know, a job cost system under general ledger control, you got that covered because you're using Vision, which is just wonderful. Susan didn't pay me to say that. Unallowable cost must be identified in the general ledger. Most firms don't have the patience to have the little things, for the most part, things like interest contributions, bad debts, those are all identified in the general ledger, and you're okay with that. And you must be in compliance with government regulations. A big one, a huge one, is the estimating in a proposal system must match the accounting records. For the most part, it's not a huge deal, but if you're on the effective cost method, I can guarantee you that your cost proposals are being prepared on standard cost, and your billings are being done on standard cost. So if you are on effective cost, then usually what we do in those cases is when the overhead is developed, that overhead rate is developed and we convert the overhead rate from a effective cost to a standard cost, because an effective overhead rate is typically, like way majority of the time, higher than a standard cost system. And then the system, you have to have a system of internal control, and that's approvals, timesheets, and expense reports. I would assume that the timesheet that I submitted on Monday is approved by someone. I'm not sure who, but I'm sure it is. And that any expense report that I have is approved. And the self-serving one here is to select a qualified auditor. Susan, do you know any qualified auditing firms?
Not anything I can think of off the top of my head, but you might.
Oh, Susan, don't be so funny. Yes, it is a big deal, selecting a qualified. And it's not just us. There's more than us in the United States, but it can be a challenge sometimes finding a firm. I know back in the early 2000s, when most DOTs stopped doing overhead audits and started having consultants hire a CPA firm, most CPA firms sitting there going, what's an overhead audit? I know in my case, I'm a pilot. And somebody sent me an email and said, do you do a FAR audit? And I go, Federal Aviation Regulation Audit? What's this all about? I found out later that it was the federal acquisition, not aviation. And I was very fortunate that a good friend of the firm, who became a very dear friend of mine, Bill Fanning, actually had forgotten more about government contracting than most people know. So he was such a great mentor and really helped me and us become who we are today. So a big shout out to Bill. So that's, consultant has responsibilities, and the main one is in, your accounting system. How are you treating cost? Are you treating cost according to your policy? Because we can see on the little thing here, certain costs can be direct or indirect, but it just depends upon your policy. Things like vehicles and equipment charges, how are they recorded? Now, your accounting system has got to be able to do that. So if you take anything, those of you that actually do government contracting, or firms that do government contracting, if you take anything away, I would strongly suggest that, the people in accounting who know how your accounting system functions, that you at least review the standard proposal template that your project managers or principals use to be sure that they are in line with the accounting records, how your accounting system is actually set up. So when it comes to this, 31201-2, we'll talk about the adequate accounting system. The contractor is responsible for accounting for cost appropriately and for maintaining records, including supporting documentation adequate to demonstrate that costs claimed have been incurred are allocable to the contract and comply with applicable cost principles. And there is a DCAA publication if you want to go download it from dcaa.mil. I think you have to put www in front of it. And that is called Information for Contractors, which is actually a very good document to go from. Now, one of the things that's extremely important to understand, again, if you don't take anything else away from here, take this. is that you bill according to contract and you accumulate cost according to policy. Now, I can't tell you the number of times that, well, first of all, I used to be the CFO of an architectural firm. And I can't tell you the number of times that somebody came in and said, well, we're not getting paid for this cost, so we're not going to include this, in my cost systems. Well, nope, that's not the way it worked in our project cost. Nope. If our policy is to charge vehicles mileage to the contract, we're charging vehicle mileage to the contract, regardless of what your contract of what you're getting paid for. But when it comes to billing, even though these costs are actually accumulated on the project, on the contract, you only bill according to what the contract says. All right, what is overhead? Again, the premium portion of overtime. I don't think that thing does. Yep, no. Premium portion of overtime, is that direct or indirect? Well, it depends. It depends upon firm policy. And how you record that premium portion really depends upon your client mix and also what type of work that you're doing. Time spent preparing a proposal, it can be direct or indirect. Again, it depends on firm policy. Use of equipment, direct, indirect. All these things really depend on firm policy. So you really need to look at that. And it's so funny because some firms will say, while our overhead's too high, and this other firm's is a lot lower than ours are. It's a function of policy more than anything else. Oh, polling question.
All right, so we're getting ready to move into the Vision Vantagepoint piece. And so do you know what setup items may be required or be beneficial, I guess, in Vantagepoint or Vision to help you with that compliance? So I see as this is trending, this one is kind of flipped actually, where it looks like, Matt, we're looking at about 76 or 3/4 saying no under this case. We'll let it trend a little bit longer, but that looks kind of like where we're landing here. Yeah, I think we can close that out. So yeah, almost 80%, 77% are saying no, Matt. So Matt and Wayne, I guess this is kind of interesting, considering the audience that we have attending today and their answers to the other questions. So we're going to go ahead and we're going to flip things over to Matt.
Are you taking care of that?
Yep, all taken care of.
All right.
And if any questions kind of pop up for you while we're walking through this, Wayne, we'll make sure we get that to you as well.
I'll let you know.
So I saw your screen for a minute. This one is the nice little unallowable list.
Okay, let me slide it over.
That we have as one of the attachments. So
how's that?
There we go. So we just see the, yeah, now we see the presenter view.
Okay.
We're just going to have to flip it like Wayne did.
Oh, I got on the wrong side.
I can see it too.
This is the fun of having multiple monitors, right, guys?
Yes. How's that?
That is beautiful.
Ah,
all right.
That swap thing actually works.
It does. Crazy how it works sometimes.
Okay,
right.
So I want to walk you guys through a few slides here, mainly talking about some of the configuration items in Vision and Vantagepoint that can help you with the accounting part and the setup part for the FAR compliance. So this first screen talks about job costing, and this screen mainly deals or mostly deals with how we're going to allocate labor costs to the projects. So you're going to set a job cost frequency up. This is mostly used when you have salaried employees using salaries as job cost rates. But these job costs will go into your project. They'll go into your general ledger, all your reportings, and they also are used to help you with your overhead calculation. So one of these in Vision, this is under your time configuration. In Vantagepoint, they've moved it down to, it's under the time settings in Vantagepoint. These screens here talk about the general ledger accounts that you can use to allocate your direct and indirect labor charges by default. So you see there are some different accounts here that they're using, some for like a principal or an overhead staff. So we can actually segregate some of those labor charges in your general ledger during the posting process, so you can help to divide that labor out between admin staff and direct billable staff and such. Very similar settings in the Vantagepoint. So again, in Vantagepoint, some of the things have moved around. So different areas to locate those configuration screens, but the underlying principle is the same. In your conversion to Vantagepoint, all of these settings transfer over for you, so you don't really have to go back and redo these. Another area that you can allocate labor is in the time analysis setup and in the override labor accounts in Vantagepoint. We use this mainly to separate things like holiday pay, business development expenses and such, and you allocate these to a separate general ledger account, and this really helps you during your FAR audits and your overhead allocations, because you could take some of these costs and actually segregate them into specific GL accounts, so you can exclude those non-FAR allowable expenses. It's really helps you during your audits when you can segregate your general ledger like that. So a lot of the setup for FAR is to get your costs segregated so that you don't have to, I'm going to slide that out of the way. So you don't have to go in and extract these expenses out manually during your audit. So you use a time analysis to separate that labor out. And you can have as many of these as you need. You actually assign projects, ranges of projects to the different accounts. So you can help to segregate those items out.
Yeah, so to add to that, as Matt just said, this is just an example. This is not the end all be all. We just kind of plugged two into our demo site, but you can parse those out in more detail if needed.
Now, expense report categories is an interesting area, because what I've seen a lot of firms do is they will set up specific expense report categories that are FAR unallowable categories, and then they set up specific general ledger accounts to assist with that segregation of the expenses in the general ledger. So you may have a travel allowable and a travel unallowable expense. So when you determine at the time of your entry that this is an unallowable expense, you'll have a specific general ledger account that you can actually allocate those costs to, and it makes it very helpful when you're doing your overhead calculations during your FAR audit and your overhead calculations. There are promotional accounts in Vantagepoint that are new. So you can actually allocate some of your promotional marketing expenses off into separate accounts also. So one of the keys to FAR in these systems, in Vantagepoint and Vision, is to separate general ledger accounts between allowable and non-allowable, because that helps you with your allocations at the end of the year when you're doing your audit. And then you can actually, I have groups that actually set up separate projects so that they can separate both in the general ledger and in the project ledger, so you can actually get a breakout in both places.
Matt, can I interrupt you?
Sure.
You didn't interrupt me because you're nice, and apparently I'm not very nice. You're talking about marketing and promotion. That there's a misconception that all marketing is bad and unallowable, that's not true. Really, only a very limited amount of marketing that most firms do is unallowable. So in the case of marketing, I would especially labor, things that people are doing, I would strongly suggest that when people do their timesheets, they put a description of what they did. Because if you put your time to general marketing or general promotion, and that's an unallowable cost, there's no way you can get around it. But it may have been that you have an account called promotion or general marketing. But what they were doing was calling clients and potential clients and asking, is there anything, do you have any work coming up? That's allowable, that's direct selling. So one of the things I would highly encourage people to do is to make sure they put comments and describe what they were doing. And that way, even if it is all jumbled into one account, you can go through and sort out the unallowable costs.
Yeah, that's a good point. And a lot of firms will actually set separate projects up for those types of marketing costs and actually segregate them with GL accounts in their general ledger so that they can actually pull those apart very easily. But again, it comes down to filling out that timesheet and those expense reports correctly.
And keep in mind to tie on to what Wayne was saying about the comments, right? If you have those projects and you want to make sure that you're getting that documented, turn on that comments are required. That way it'll help you kind of drive that documentation naturally.
Yeah, Susan, I know a firm that has comments required on their timesheets.
You know them personally? Absolutely. It barks at you, right?
Oh, it says there's a missing field.
Yeah.
Exactly.
Yeah. So again, a lot of success in FAR compliance is to segregate those costs. So use projects and use general ledger accounts and map those together so that you can get those costs separated. It makes it a lot easier at the end of the year when you're doing through your calculations. And here's that good old list here. So a couple of things that stand out here are, general public relations and trade shows, things like that. Alcohol is a big no-no. Social activities, lobbying, political activities, things like that. So there's some pretty obvious items that are not allowable for FAR purposes. And again, we want to get those segregated in our general ledger so it's very easy for us to pull those items out. If you go through a FAR audit, it's very easy for your auditors to pull those items out and be able to audit them pretty easily. So it makes it easier for you to get through your audit. This list is actually in the handouts, so you can have this for your records if you need it. And again, this is where we want to get these costs to go into your GL and into your income statement. We do have the promotional type projects that can help you to separate that, those marketing expenses. And that's really important because the general marketing, again, is the unallowable part, but the direct marketing costs can be allowed. So I want to make sure that we do have them separated in your general ledger and in projects. So keep your projects set up so you can segregate those costs out. Time entry is a fun one because FAR requirements do require daily entry of timesheets. They're very strict on that, so you do want to make sure that your staff is compliant with daily entry. Pre-filling your timesheet is not allowable under FAR, so those people that like to fill their timesheet out a week in advance, so that's really not allowable unless it's like a holiday or a PTO type of thing. So daily entry is really important. It also increases the accuracy of your time recordings, so your project costs are a little more accurate. Requiring comments, very important. So if you have specific projects, you can actually turn requirements on per project on both Vision and Vantagepoint, or you can turn it on globally. So you can control that a little bit, but comments are very helpful when you're going through trying to make sure your costs are in the right places. Time approvals, again, daily timesheet entry, project manager review and approval of those timesheets to make sure that they're in the right places. That's very helpful. Time transfers, we do want to make sure that There's documentation for time transfer if that's taking place. You can turn on the timesheet audit feature inside the both Vision and Vantagepoint. That can help you with documentation as to why things were transferred. Floor Check's a great tool if you haven't used it. It helps you to manage that daily timesheet entry. So you can watch your staff and make sure that they're entering their timesheets every day and keeping their timesheets current. Consistency on how charges are coded to projects. So we want to make sure that everybody's kind of playing off the same sheet of paper here, so we're all charging to our projects correctly. And written policies are pretty important also for compliance with the FAR regulations. And questions?
All right, great. So just wanted to kind of rewind a minute. There's a couple questions out here for you, Wayne. I don't know if you can see them or if you just want me to read it to you.
I can't see squat.
Okay, well then let me read it and hopefully.
The only question I see is Vision is great.
Yeah, that was a good one. That wasn't a question. That was a complete exclamation statement. All right. So the first one from Julia says, is it okay for a client, basically the government client, to ask for copies of pay stubs of employees working on the project to verify the markup on your billing rates? And there's more. Traditionally, we've had to do a certified letter stating employees' hourly rates, but this one was new to us. Some employees felt their confidentiality was breached.
According to contract, the government has a right to everything, and according to the law too. So basically, when you contract with the government, they have a right to see everything, and which is, I guess that's okay because it is what it is. No, I mean, yes, they have a right to do that. And this whole thing of confidentiality, how many firms show their direct labor rates? How many firms show the actual cost of the contract? That's just one of the things about this industry is there's not a whole lot of secrets. But the short answer to the question is yes, they can. And it's not uncommon to show have to give certified payrolls.
Right. Certified payroll for sure. All right, awesome. All right, so the next one is from Steve. And Steve says, what is the value for FAR purposes in segregating out indirect labor? He was under the impression that BD sales labor was fully allowable.
All right. You want to segregate out, and I'm going to take this a little bit further than that. We have some clients that just record indirect labor as indirect labor. There's no distinction between holiday, PTO, vacation, or whatever. And it's from a government contracting perspective, it's actually important to distinguish between your general indirect labor and then your benefit labor, be it holiday, PTO, vacation, or what have you. As far as the business development, BD sales, the actual one-on-one selling, the issue is not segregating out that. The issue is segregating out the costs that are not one-on-one selling. Again, you need to have comments on, you need to document who you spoke to and generally what you talked about as far as the sales is concerned. But there also needs to be a classification of unallowable marketing. And that's things like trade shows, that's things like entertainment, because if you take a client to play golf or a potential client to play golf, yes, the cost of the golf itself is unallowable, but also the labor associated with playing golf is unallowable too. So you need to have different categories for each one.
Great, thank you. All right, here's the next one from Jackie. In 2020, the lost year for all of us. My company accrued a salary earnout for a company that we purchased, and that earnout will be paid in 2021. Is the amount that was accrued in 2020 for that earnout considered unallowable in 2020? Or is it unallowable in 2021 when it's paid?
You're required to have accrual basis. So it is 2020 is when it is unallowable, is when it's unallowable. The fact that it's paid in a subsequent year doesn't matter.
Got it. All right. The next one is actually for Matt. Diane was wondering what that floor check tool was.
Oh, floor check is in your timesheets. If you are a timesheet group administrator or system administrator, there will be a floor check feature under your employee link in Vision, and it's under the other actions in Vantagepoint. And based on your access to timesheets and the groups that you have access to, you will be able to see those timesheets as they're being done. So you'll be able to see your group and how many hours they're supposed to be entering and how many they actually have entered. And it does give you the ability to actually open the timesheets and look at them to see what projects they've charged to. Usually we don't let people edit the timesheets, but that is an option. It's also available in your configuration. It's a great feature.
It is a great feature. Awesome. All right, the next one I think is from Gary, one of my best buds. And I think it's more of a shout out. So he's saying, just a note, with the help of SN, we segregated out our FAR FS from our internal FS simply because the listing is different for both. So thank you, Gary, for that shout out.
Yeah, you know, it's interesting. I always tell people, you know, they'll ask me about their accounting system setup and how it needs to be set up. And, you know, this whole concept of allowable and unallowable accounts. I just tell them, listen, you don't want the tail to wag the dog. You know, the purpose of your accounting system and your financial statements is to give you information about projects, project managers, principals, and the overall profitability of the firm. Now, there's things that you can do to make a set of financials for the government, but it sounds like SN unlocked the key to doing that, which is great.
Awesome. And then from Rachel, is daily timesheet requirement just for direct employees or everyone?
Everyone. Everyone. Should be a standard company policy.
Yeah, if I were okay, I've got to be careful what I say now because I just told on myself earlier. Dang it, I shouldn't have said what I said.
I know. You got a black mark on you.
Oh, okay. Anyway, the reality of it is, listen, I barely remember what I did yesterday, much less today. And the part that just drives me crazy and drove me crazy when I was at the architectural firm is that indirect labor ended up being what they couldn't remember they did. In other words, okay, I've got direct labor for 4 hours. I don't remember what I did the other 4 hours. They make stuff up. You really need to prepare a timesheet on a daily basis in order to accurately record your time. And, you know, you're accountable to your employer for your time, and you should honor that and have an accurate timekeeping system. Now, Matt, I'm going to go a little bit, I'm going to give you an opinion, okay? You're exactly correct that timesheets are required on a daily basis. But we do have some people that keeps notes in notebooks, and they'll do their timesheet on a weekly basis. And I've got heartburn on that, but it's not like, oh my gosh, you're going to go to jail type thing. But I do appreciate you saying that it's required, because it is required.
Well, I love the notebook concept, but nobody else can see that until they put it in the system. So.
Oh, I agree with you. And what happens if you get hit by a bus?
All right.
Yeah. Yep.
Yeah. Well.
Spoken like a true systems guy there, Matt.
Yeah. So as a former CFO, I know that I did not like it when my employees didn't do their timesheets on time.
Oh, that's another one. Do you know the secret to having timesheets done on time?
No, this sounds like a joke coming. Go ahead, Wayne.
No, it's not a joke. This is absolutely
Okay.
not a joke. But I used to go to all these meetings when I was at the architectural firm, and everybody was always gripe about getting timesheets on time because that was always an issue. And what I finally learned is that accounting, in my case, I could gripe about it and didn't mean anything. But the day that the big cheese, the president of the firm, said, "You get your timesheet in, or else, there'll be hell to pay," that's when all timesheets got in on time. So it has to be a leadership thing. It has to come from the top.
Oh, absolutely.
And so that's the key. That's not a joke.
So Steve will be calling you then. Is that what you're saying?
Well, that was the threat. So crap, I gave my timesheet in.
All right, and then we have one more question from Diane, and it is, would setting up a cost pay rate table for all or just government contracts allow the employee time analysis to work when trying to gain the actual rate paid in prior years during an audit? Did you get that, Matt? Because I think this is for you.
Yeah, it sounds like
that's a good question. I would say using a cost table is adding an allocated cost rate, and FAR is going to want you to have the actual raw pay rate for the employee. So I would prefer to go right from the employee's pay rate, and that gets allocated to the projects at the time you post your labor. So that's going to be the most accurate portrayal of the labor cost.
Yeah, so that's standard cost at 2080. So yes, if I make $20,800 a year, my standard rate is $10 an hour, and it's hard, and it's in the system for as long as I get paid 2080. 20,800.
All right. Well, I think that does it for our questions, and we're 2 minutes, according to my clock, over time, unless I look at my cell phone, and we're right on time. So obviously,
right on
I'm
time,
one of those people that have 2 clocks in front of me, and I don't know what time it is. So thank you, everyone, for joining us today, especially Wayne and Matt for presenting. We hope you all enjoyed it. You're welcome. And please sign up for Insight, and we'll see you back here in October. So thank you, everyone.
Thank you.
Thank you.
Jesse, you can close things out for us.